September 18th is the most anticipated FOMC meeting in years. Now, according to the CME FedWatch tool, the market believes that this will be the meeting that the easing cycle begins. Probability is currently split between a 50 or 25 basis point cut. The market also says that the rate will be at approximately 3% by the end of 2025. Now, U.S. two-year yields have collapsed in anticipation of the event from a high above 5% in late April down to a current level of 3.73%. The question is, will the Fed be able to gradually lower rates to eventually get to what they consider the neutral rate, or will there be a sudden need for greater stimulus in the event of a recession? Now, the economic data we've seen so far has given us insufficient information. While the labor picture is clearly softening, it's still above any call for alarm, particularly with the GDP still hovering near 3%. However, the ADP number on Thursday morning was significantly lower than expected. This should increase scrutiny on the non-farm payrolls number on September 6th. Now, expectations are currently for an increase of 165,000 jobs. The last time we saw this series was a major disappointment, coming in at 114,000. Inflation numbers have also been trending in the right direction, but PCE was 2.6%, which is far better than it was, but remains well above the Fed's stated target of 2%. Now, after the NFP release, the next major events will be the CPI and PPI data on the 11th and 12th. If a trader believes that two-year yields could continue lower from here, they could express that by selling the September two-year Treasury yield futures contract at 3.65 and targeting a move to the psychological level of 3.25. Now, a stop for this trade could be placed above at 3.90. This trade can make $400 if the target is reached and risks $250 if you're stopped out of your level. Now, if a trader believes the two-year yields could bounce from here, they could express that by buying the September two-year Treasury yield futures contract at 3.65 and targeting a move back to the mid-July lows of 4.42. Now, a stop for this trade could be placed below at 3.15. This trade can make $770 if the target is reached and risks $500 if you're stopped out of your level.